And we're back. It's the first show of the year. We're back to our normal structure of doing weekly technicals. We've got the man, the myth, the MM. He's back after probably the most extended vacation he's ever had, and he's never having one again. MM, come back.
Yo, man's back. All right,
Awesome.
let's do this. Let's begin with fundamentals. I think that makes sense. Let's look at the previous week before we start looking at this week. I've closed out the filters here. Let me switch this on. Okay. So last week we had a bunch of bank holidays. So there was a lot of low volume towards the start of the week. And then we started having lot of big reports, by the way. When it comes to CPI data, Powell started speaking, Fed chairman. So we did see Chairman Powell speak. It wasn't his comments were not as volatile, like he wasn't saying much. So there was nothing much to interpret there. Yeah. The main start of the event was CPI last week. So CPI did fall last week from 7.1% to 6.5%, exactly as forecasted. So the inflation rate is slowing down, but something that I usually don't just look at the numbers. I go down into the statistics, look at the reports. To me, these numbers are the inflation technically is falling, but I think the data is manipulated due to fuel prices being manipulated. Because if you look at the data, the
Yeah, let's pull that up because we went over it on the last call, and it was quite interesting to see how actually what the proportion of fuel is within the
yep.
basket. And it seemed to be the only thing that was making an impact to the CPI, and whether that actually counts as CPI being reduced. But so 6.5 was the target or the estimate, and that's what they've announced as well.
Yep, exactly. So if you do look at the data here and you look at the December column here, what do you see is the most drastic change was in fuel, right? So fuel oil here. You see how in November it was at 1.7% inflation, and inflation dropped with oil, the prices, to negative 16.6. That's a big difference, right? So, but if you do notice the consumer side of things, there hasn't been much of a difference, not a big difference. So if you look at food, a little bit of drop, not much. If you look at like utility and stuff, utility actually went up. So it was negative 3.5 here, and you see how it's gone up to 3. You see how it's negative 0.2 here, it's gone up. So consumers are hurting even though inflation is dropping. So I don't think inflation data is reliable. So, and the sad thing is that the Federal Reserve are taking actions based upon this data here.
But
So
surely
it's
they
good.
must be digging into what the actual basket means and what it says.
Yeah, I mean, I hope so. But from what I've seen, they're already slowing down the pace of rate hikes. Because if you look at the CME futures market, they are pricing in that 25 basis point hike in the Fed meeting will most likely take place. So if that does happen, that means Federal Reserve are they're not truly looking into everything, because according to data, they're not only supposed to be looking at CPI, they need to look at everything, right? Labor market and everything. Because if you look at the labor market as well, let's look at the labor market actually, the first week of Jan. You will see something is that the non-farm payroll, NFP, data came in higher. That means the labor market is still persistent. And if you even look at the unemployment data, that still came in lower than not only the forecasted, but even the previous month. That shows you the labor market is still persistent. So inflation is still running high, right? So they need to make decisions depending on all of these data. And I hope they make the right decisions, because till now, if you look at the decisions they've been taking, just they're not looking completely, I feel like, into all of these numbers, because there are a lot of Fed members, right? It's not only Powell speaking, there are a bunch of Fed members who all take a joint decision. So hopefully all of them take an informed decision on this.
Look, we see what the other members are kind of coming out with in some of the statements. There are some members there that are a lot more bearish, and don't really
Yeah,
seem as confident in the Fed. I think there's just a lot of polarity within the Fed. I think an organization that's meant to be detached from politics and government has aligned almost, because there seems to be this, the way the numbers are communicated, it's almost with a political agenda. It's population control. We've seen it where they were kind of fighting the idea of inflation. They're fighting the idea of recession. They don't want to use the words or change the definition.
Yep.
So this is really just to prevent people from either acting in advance of these big statements like inflation, so increasing their prices, but also to stop people from, I think, doing bank runs. At the end of the day, that's the biggest concern right now, is how over leveraged the fractional reserve system is. So I'm taking all of this with a pinch of salt. Was it December when the Fed said they wouldn't be making any rate cuts during 2023?
Yep.
So they're still saying that they're going up. They've just reduced the rate of cut, the rate of the increase. So from 75 basis points, do we have 50 basis points just before the end of the year?
We already had the 50 basis point hike in December, and the plan is that they might now go down towards 25 basis point in Feb. So here you do see their comments, right? Right after the inflation data came out, they're gonna keep on hiking rates till it's at 5%, right? Once it hits 5%, they plan to pause and hold this rate towards the end of the year, and then they must start cutting rates in 2024.
But they must understand this is a dynamic process. They need to be evaluating almost on a daily, monthly basis as the data comes in. They can't make a
decision.
An overarching statement like that. So I think, yes, it's being said, it gives sentiment on a short term, but with a long term wording.
Yeah, I mean, they keep changing their targets. This was like last year, if you looked at this was at 4.5%. Now they've hiked it to 5%. So yeah, you're right. So over the time, they keep on looking at more data. I think they're going to increase their targets as well, because there's a lot of, I mean, the inflation ran out way out of hand, because their inflation target is at 2%, right?
Yeah.
So we are already at 6.5. We're still long ways ahead from target, right? So it's likely that they must still stay bullish with the US dollar, just looking at fundamentals. So I guess we'll have more of a clear picture in Feb.
Do you know what scares me about that 5% is that's the Fed's rate. So what is the rate of, what's the interest rate on the debt when it reaches a consumer?
Oh, exactly. That's what you got to think of. Yep.
And look, it's like double-digit interest has existed, and there was market stimulus. I was having a conversation with my parents when in like the 70s and 80s when they had double-digit inflation, and they're making like close to 20% interest keeping their money in the bank, and they're still buying property.
Yeah.
But at that time, they just were opposed to taking on third-party debt because of, I guess, if the Fed's rate is 5%, then by the time it reaches the commercial bank, they've got margin on, and then it's coming to you. Cool.
Yep, exactly. Yep. But I guess you gotta be well versed with finance to take advantage of the situation. Most consumers are gonna hurt during times like these.
Well, this is where you really feel the recession is, because if, for example, let's look at household real estate developments. Any kind of infrastructure construction project has a debt to equity ratio generally favored either 30-70, with 30 being equity, or 20-80. So a big proportion of the capital cost and the funding of it, the source is coming from a debt source. And for a developer or the financer to make any money on these kinds of assets, they're going to have to hike up the rates. So you're going to see probably higher real estate rates, or these organizations will end up making a loss.
Yep.
So there's probably going to be a lot of pressure, I would say, on the corporations and the sort of the middle sector who are providing these assets directly to consumers.
Yep. Exactly.
They haven't been favorable, but you obviously the fuel price is the biggest impact on the basket, the biggest change. And I think the months leading up, sort of towards the end of last year, the US was selling down their oil reserves significantly. I think they're more or less depleted based on the idea of buying in at a certain value. I think that was that $80? They said they would refill their reserves.
Yeah, I think so. It was around 80.
So And I completely agree with you. Manipulation.
Yep.
That's the only thing they could do, and it's I would say a single item in that basket of goods that they have direct control over.
Yep.
The
Exactly. Yep.
the impact of depleting those reserves has been what's controlled it. And you're right, they're selling the idea of this number.
Yep. That's why I think the markets are extremely euphoric at the moment. And we're seeing the highest volume we have seen in years, the trade volume. So we do know a lot of retail traders are involved in the market in the last 2 years. So when the time does come, I think the big institutions are gonna take all the liquidity out of retail traders' hands. So we have to proceed with caution when it comes to trading last year and even this year. And if you already do look at the comments of the Federal Reserve, we already see they are comfortable with moving with 25 basis points, right? So we have already two Fed members who are already are looking towards taking a 25 basis point hike. So we got to see what happens in the Fed meeting now. Yeah. All right. So last week, though, let's see the last week's stats. This was CPI. What else did we have? So on Friday, we had the pound, British pound, and its GDP actually dropped, right? So it did drop from the previous month. Let me show you the statistics. If you see the December one, right? So it went up in December, the GDP from negative 0.6. But what's interesting is this month it has dropped to 0.1%. It isn't as low as the forecasted amount, but it has dropped. So this does show you that UK is still hurting, and from my perspective, I think the euro and the UK area might be the worst. They're going to be hit by recession the worst. So you got to keep a stat out on this, because all the pounds that have been trading with GBP, which we'll look into now, we see a lot of weakness with British pound. Yeah. What else do we have? We have consumer sentiment from University of Michigan. So the consumer sentiment is still high. That shows you the consumers are still their sentiment is still high in the economy. Because this should come in the red, right? This should come in the negative, lower than the forecast and the previous month. Because if rate hikes are happening, they should start seeing this number start coming in lower. But if you look at the statistics from the last month as well, it's gone up, right? So you see 56.8, 59.1. Now the consumer sentiment has been going up. All right. Anything to add before we move into technicals? All good? All right. All right, let's look at Dixie, yeah? So Dixie, let's look at the yearly chart. This is something rare that happens. So I look at the yearly chart once, definitely once a year at the start of the year. So let's look at the yearly chart this time. Yearly chart, we clearly are bullish, but this wick towards the top isn't. I don't like this wick personally, but we are bullish, right? Let's look at the monthly chart though. Okay, so the monthly chart to me has been very interesting, because you see how it's mimic the same bullish this movement right down here. So something I have been keeping an eye out on is this support here, this support level here, and this falls at 101 to 100 area. Yeah. So if this area breaks, then I might be a little bit cautious. And this red line that you see here, this is the yearly trend line, right? The yearly trend line. You see this? So there's a possibility if this breaks, we can see this get a retest. So at the moment, this is what I'm keeping my eye on, because if you look at structure on the monthly time frame, it remains bullish. Yeah. So
Yeah, I've been paying a lot of attention to the monthly time frame. I think that
yeah,
level is the only time frame that we haven't had any confirmation of the breakout. So
exactly.
if
Yeah.
you look further down on the weekly, the daily, we've confirmed that breakout from that level. What is that level? 102?
Yeah, it's around 102. Yeah, around
Yeah, so
102.
we've
Yeah.
confirmed that level on every single time frame, the breakout other than on the monthly time frame. So hoping this level holds, and that would sort of complete the thesis of the theology of what we believe in, that where we're moving towards this sort of depression. And right now, where are we sitting in sort of historically? We've been sitting at sort of .com levels for a long time.
Yeah, I mean, if you look at the peak of last year, right there, at what 113, this fell around, yep, around .com levels at 2002. Yep.
2002. So what's the very key levels that we're looking to break here to drive us past that?
I mean, it's definitely for this support to hold, and the second thing would be at this area here to break. If this area can break here and find support at this area here at 113, I think then this will look really, really bullish. Because one thing that would be important, if this support can hold, and then if we go down to the weekly time frame, and we see this trend switch. So this trend needs to switch on the weekly time frame as well for us to be bullish. So if this area here breaks, this area here breaks, that means structure breaks, right? So if it can do something like that, find support and take off, then that means we are now getting into the multi-time frame correlation. That gives us more bias towards holding that we would hope that US dollar gains strength, right? So if you look at the daily time frame as well, we still are bearish on the daily time frame as well. We need to start breaking these levels. You see this line that I've drawn out here? We need to break this area here. So what I would wait for is to see if the support holds, and if this support can hold, can the trend switch on the weekly and the daily. If that happens, that would be a really good confirmation for us to start taking trades based off on that. Yeah. But if the support doesn't hold, let's look at the scenario where the support doesn't hold. If the support doesn't hold and it finds resistance around this area here, then I would now be bearish on the US dollar, right? Because as traders, we react and adapt. We can't hold to biases. So if this does find resistance, we will start taking positions based on that. Yeah. So now we are just at a critical level. We're going to just observe. Yep.
So one of the things that I thought was quite interesting, I think it was on I think it might have been on the daily time frame. Yeah, it's on the daily time frame where obviously a big retail signal is the 50 and the 200 MAs crossing. And we had a huge def cross formation, which I would say is probably the quickest def cross I've ever seen form.
You said the 50 and the 200, right?
Yeah, I've got it up
See.
on mine if you want me to share mine instead. But yeah, like it's probably the quickest def structure I've ever seen form. But I think what I would say about this indicator is it's generally a very lagging indicator. This movement's happened so quickly that it's likely that the bearish movement that caused the two to swap will recover quite quickly, because this looks like the bearish structure and it's given us the
Okay.
monthly retest.
This cross here. Yeah.
Yeah.
Okay. Yeah. So yep, we do see the death cross at the moment. Yep.
But a very quick narrowing of the bands.
Yep. If you do see that, yeah. I mean, on the weekly chart, do we have anything? Not yet. I think it's only on the daily. Yep.
And for now,
Yep.
that's fine. I think like what you're saying is right. Like this is a very crucial level for the Dixie to support the narrative. But that's not to say that it completely invalidates that the bullishness on the dollar, if this breaks, it could buy into the scenario of sort of a double peak inflation.
Yep. Yep. Exactly. Yep.
Like, is there any other price gaps that we've sort of accumulated along the way?
I believe so. So if you do see this, we have a price gap there, right? Like throughout the whole movement, like what has happened here because of these price gaps here, once we go down to the other charts like BTC or even gold, you'll see kind of the same price gaps because of the dollar movement. Yeah. So you do see gaps here, gaps there. You see another one around this area here. Yeah. So we do have a lot of gaps that need to be filled. But it depends, will it hold? Will the support hold is really the question. Yeah. All right, so as Dixie good, yeah, Dixie is good. Let's move into BTC then. Sweet BTC. Let's look at sweet BTC. Let's start with the yearly time frame. You do see the yearly time frame, right? That's almost like a Marubozu candle, but it isn't. Like Marubozu candle is basically the sellers control the whole year, basically, yeah. And do you see how this is a big bearish engulfing on the yearly time frame? So that's interesting to see. One thing I would do is actually mark out the lows of the year. So that's something I rarely do, but let's actually mark it out and see. Right there, that's the low. Let me log that in. So that's 2022 low. All right. So 2022 low. Let's see if that breaks this year. All right. So on the monthly time frame, what do we see? It still remains bearish. Yeah. Like structure wise, let me draw the structure. Where is it? Where is the structure here? Yep. So what do we see? Nice, clean, lower highs and lower lows, right? So now we are at a critical area, right? On the monthly time frame. If you do see what it's holding a very interesting, very uh big resistance area here. This is the monthly time frame we're talking about. So this is a very strong resistance. And this resistance falls around 20, let's say 21, let's say 21K. So this resistance at the moment is holding, right? So the question is, does it hold? And now again, we see another leg down like that, right? Or do we see price actually break through above and then find support at the same area like that, goes up, find support. So what we gotta keep an eye out on this area here, 21K. And from just looking at the high this time frame, we are bearish, right? So we gotta wait and see what happens. I think the Dixie might once whatever happens at this support might give us some direction even with BTC here. Okay, so looking at the weekly time frame, the weekly time frame is bullish, right? So I think I remembered in the Wednesday call, I did say this gap right here might get filled, and it did. It's filled out, right? So what has happened was it broke through all the structure points. If you look at structure itself over here, what do we see? Broke through, right? Why is it bullish? Because it broke through the structure point here. You see the weekly structure point? Yeah. So we are bullish on the weekly time frame and the daily time frame as well. Definitely will be bullish. What has it done as well? Again, if it looks towards the left, it has mimicked the same momentum. Now the question is, does this area hold, right? So from looking just by looking at this weekly candle, we do need pullbacks. Pullbacks are necessary to grab liquidity because there is another bullish scenario that is possible is price can actually pull down all the way towards this area here and then find support and then take off as well. But I wouldn't be surprised if this coming week with this much volume, there's a possibility it breaks up above, find support here. Let's look down into the lower time frames as well. Look at that. That's just a lot of momentum. Way too much momentum, right? So it is price needs to find fuel, right? To keep moving. The volatility is just if you look at price, every time price moves this way, it needs to retrace, right? So what has happened here? Price did move this way. If you look at this area here, price moved here and price never came back to retest this area. There was a lot of liquidity stuck in this area, right? So now what do we see? We're starting to see a little bit of a weakness. This candle hasn't closed yet, right? So we see a rejection of this area, and also we are starting to see some pullbacks. Like look at the 12-hour time frame. What do we see? A smaller body, right? What does the smaller body indicate? Lower momentum in the last 12 hours. Like keep comparing the candles. That's big. This body is bigger than this one, right? So you do see a lot of momentum is getting lost in the lower time frames. So I do expect a pullback, which is necessary, but we got to wait and see.
Would you say that that's it for, are we still looking at lower lows on BTC? I'd like, from my perspective, social media, Twitter, for example, crypto Twitter was very, I'm not going to say fuddy because that's generally got a bearish sentiment to it, but I would say was it was just too much bullishness for what the market situation is. And as you said, nothing seems to be attached to reality. All of the posts start to come out about 3-year bull market, 1-year bear market. And okay, you showed it there that there's almost a Marabusu candle where the sellers have controlled the market for a whole year.
Yeah.
But I think nothing is the same right now in regards to BTC. We need to be very realistic about one global macro situation, take into account the Fed's decision on QT, and like I said it on I think one of the other calls about my idea now has changed on BTC that whilst halving cycles have dominated or triggered every bull cycle, we've never been in a period where we've had QT. So there's not a lot of excess capital for people to put on assets that have no, what's the word, regulation.
Yep.
So, but that being said, there is something weird going on. If you look at like the level of capital that was going into into places like Ukraine, and none of that is US capital, so it's all deficit that's being accrued. So it's more stimulus, more money printing. The Fed's balance sheet in the grand scheme of things hasn't really shrunk at all. And like the US, I can see a lot of like the right wing are very opposed to all of the funding that's going out to Ukraine. But there's no actual, I would say probably 80 to 90% of that funding isn't even leaving US borders because it's effectively being printed and then given to big defense elites like Lockheed.
Yep.
So that's still market stimulus. There's a very weird situation where, okay, interest rates are climbing, but you're still printing and stimulating your economy.
Yep.
Or you're stimulating the US economy.
Yep, exactly. Yep.
Hi guys, how are you?
Oh, hey, Missam.
Oh, Misa.
Hey, how are you guys?
Good.
Good, bro.
Guys, regarding the BDC, from whatever I spoke to people, what's happening around. It was a very big whales manipulation. Liquidations getting short to almost around 700 million, and market makers playing around it. They are still, even me, I'm still bearish on it. I don't know, as Aaron was mentioning, I don't know what happened. There was no S&P movement. There was S&P move, I think 2%. And the only good thing was that they said that, or what I feel is that just people were sitting idle and they want to start. It's again, BTC is a very small group of people who control it, the big whales, and they just wanted to start on a good positive note and get the retailers in. And then again, if as you mentioned, Twitter was full of like, oh my God, bull market is here, yeti. I was like, guys, what you doing? So yeah, it was very weird to what happened last week.
And like they say like the bots aren't there, but like I'm seeing almost copy paste of like posts, like the same sort of messaging, the same narrative. And that's what always gets me, especially in the finance industry. And you can kind of almost expect these liquidity grabs because of the level of media that's kind of pushing in one direction. And like I'll say this like all the time, like you'll only be told something that they want you to be told.
Oh, absolutely.
Yeah. So all of it, and this is where people just start to buy in and buy the FUD, and it's where people go for source of information, but it's so biased. There's no actual mechanism behind it. But every single one of these publications to date accepts money for publication. So there's no, it's not news, it's opinion pieces or paid publishing, or what's the word? Distribution, outsourced distribution. That's the only way you can put it to. If you aren't an Instagram influencer with your own community, your own following, you're relying now on these what were journalists that have now become media distributors. They receive press releases and they've all got the same narrative, the same terminology, and they just ship them out. You spend $10,000 with what Cointelegraph and you'll get a post.
Yeah, absolutely. So yeah, it was a bit weird, but well, I'm always positive about BDC, so it was good to see some green candles after so many red candles momentarily, and some just to see something moving up in the portfolio. So it was good, but then yeah, it was a bit skeptical. I was like, what's going on?
Yep. So the main thing here I would say is keep an eye out on this 21K area, because if this structure does break here, then we might be short-term bullish, right? So this area is quite important, and I think the most important area will be around this area here, which is 25K, 24,500. If this area here breaks, then we might see heavy bullish momentum, right? But realistically, I don't think that will happen. So at the moment, as even Messam said, we are all bearish at the moment, yeah. because this is an unnatural movement. This had to happen, and just like how Misam said, the short sellers were liquidated. It had to happen because there was a lot of liquidity left in this area that had to be grabbed, right? Every price gap has to be filled. So this is what happened, and we are already starting seeing a little bit of pullbacks because this movement is unnatural. This is not supposed to happen. Yeah, we need to see some pullbacks. You see how down the lower time frame we start seeing momentum slow down, slow down, slow down. I mean, I'll go down even to 1 hour time frame. You see, we've seen tiny doji candles.
Just
So
go to the 30-minute time frame and zoom out. Just look at the growth of the curve.
look at that. Yeah, that's
Yeah.
that's just unnatural. We gotta see some pullbacks now.
But we do
Uh,
have price caps there, I think.
on the 30-minute.
No, I think so on a higher time frame where we've developed price gaps in like the 20 to 30K region.
I mean, there's a price gap all the way here actually. Even down at the 17K area, we do see price gaps. Like, look at that, right? Price broke through, we never saw a retest, right? So there are price gaps all the way. Actually, there's a price gap even here. If you look at this area,
That's the thing. It happened too quickly, so this thing's gonna come crashing down.
yep. But actually, if you look at the BTC chart, there's a little bit of similarity with gold actually. I'll come to gold in a minute, but gold as well had started breaking a lot of points and never came back to retest. So but at the minute, BTC's chart is just too unnatural. There is no pullbacks at all. So this is it's natural that this will pull back. Me personally, I don't want to trade this, right? If you want to trade this, you can trade this. But me personally, I would wait for the weekly time frame, at least the weekly time frame and the monthly time frame and everything to align bullish. And that only does happen when this area here breaks at 21K. If it can break 21K and find support, then I must start taking longs. Yeah. So that's my long scenario. Actually, let me mark it out. I might take longs, but I would be very careful with taking longs as well. I would not hold on to the trades for too long. Yeah. So that's one scenario I look at. Obviously, with the bearish scenario, I think you will have to wait for a while because it needs to pull back way further. So if you see the bearish scenario, it needs to break this area here. So it needs to break area here and find support. Sorry, resistance. Why do I say that? It's because if price does break this structure point here, that confirms that the weekly time frame is bearish and the monthly time frame has maintained its bearish structure as well. Yeah. So if this does break at 16,500, then I might start looking at taking short positions. But like I said, it can be this week or it can be maybe a few weeks till it comes to this point here. So if you want, you can mark out your alerts there. Let's look at the daily time frame as well. So there's one possibility that can happen that can be very interesting. That price can do this, right? Or if the long scenario still keeps playing, price can do something like come down to find support here, right? Can find support at this area here. Let's call it to 17K and then take off. But me personally, I wouldn't take this trade. Why? It's because the monthly time frame is not aligned bullish. Because if it does pull back, what would happen with the monthly time frame? It will be a massive wick towards the top, right? So this can happen, but I wouldn't advise you to take this trade. Wait for all the time frames to at least be perfectly aligned. Let's look at the daily time frame as well. Yep. So how we mark this out, I think this is the best scenario. For me personally, I think I would wait for 16,500 to break for me to take a position. Yeah. And if it's long position, then wait for this area here to find support. I think that's clear. Yeah. Let's go to the next pair. Let's look at Ethereum then. Let's look at Ethereum. I haven't marked out the Ethereum chart, I think, in a very long time. You already see my old template here. Okay, we can use it though. Let me delete this.
Had a lovely trade off Ethereum.
Yep. Aaron has been killing crypto recently. I think it's Aaron's volume that's got us that massive BTC candle.
I was shorting out Sol.
Oh, shorting Sol.
You were shorting
I was
Sol when I
shorting.
was longing?
Yes. Yes, I got kicked out.
Uh, I think Aaron took your money, bro.
Even my BTC got, I was shorting BTC as well. I forgot about it, and then that also got liquidated.
Oh no, man.
Yeah, it's okay.
All right, so the yearly time frame on the Ethereum, we don't see the same bearish engulfing that we saw with BTC. So the structure of maintenance is still bullish when it comes to Ethereum here. Yeah, that is something interesting to see. Let me actually mark this out red. Let me put 2022 low. Right, so it still remains bullish on the yearly time frame, right? So on the monthly time frame, what do we see? Let's look at structure. What do we see? We first now we've seen a lot of choppiness from all the way from July of last year. There was a lot of choppiness in this area here, and we still see the price is still stuck inside this consolidation area. So the interesting thing would be usually when price does consolidate after a bigger move like this, bearish downside, usually that means it's grabbing a lot of liquidity at this area to now make a leg upwards to grab a liquidity towards the top. But if you do look at price, it's consolidating, and I think if you look at the structure, I still remain bearish. I don't even remain bearish actually. This is a lot of choppiness. I think I'm neutral at this position here. What I would wait would be is to see if price can break these lows here, right? It can break these lows, find resistance, and then drop. That would be a nice position to take on Ethereum. Or if price does break towards the bullish side, I would wait for this area here at let's say 1700. If 1700 can break and then again find support and then drop, go up, this would be an interesting area, because then we have confirmation at least on the monthly time frame that we are bullish, right? So before I do mark out the points, let's look at the lower time frames. All right, so the weekly time frame is bullish. We are kind of seeing the same kind of weekly candle that was mimicked by BTC, right? So it's pretty much the same kind of price movement. Because if you remember BTC, I said it's at a very crucial resistance area, and what do you see? It's at a very crucial resistance area as well. Yeah, so this is something to keep an eye out on. And then we look at the weekly time frame. Again, what is finding resistance at this area? Yeah, like if you look at previous price action, this is a strong area of resistance. So I would tread lightly with Ethereum as well, because you look at the price action, that's exactly pretty much the same. Yeah, so let me mark this out. Let me see which areas are higher probability. I would personally say this area here breaking, because this is not only the weekly lows that gives you another confluence, but the monthly structure breaks. Yeah, so this would be around, what is it, 1200, is it? Yep. So if this area here breaks, then I will start looking at short positions. And when it comes to the monthly time frame, I would see if this, just like BTC, if this area here can break through and find support, right? Then it would be interesting to maybe start taking long positions, but not long positions for short term, right? Short term buys. So this would, I would say, 1580 area here. Let's look down. Let me reconfirm on the lower time frame. Yep. I think this is pretty much almost one-to-one copy with BTC, yeah, the price action. So the same scenarios are playing out with BTC and Ethereum here. Let's look at the daily time frame. Yeah, same thing. Let's look at again, just like BTC, what's happening now? The momentum is slowed down. Again, what do you see with the 8-hour time frame? Momentum. Let's look at the 1-hour time frame. You see, momentum is slowed down and it's now starting. It's consolidating at this area here. Let me draw a rectangle. You see? So now we need to see price break through this consolidation box here and make its way downwards. Or if it does make its way upwards, we got to see if price can find support here, right? Or even here, actually, it can find support here as well, right? So gotta be patient with crypto at the moment, I would say. Yeah. Any questions regarding crypto before we move into forex pairs?
No.
Cool. Okay, all right, okay. Okay, let's look at GU. Let's begin with GU. My GU charts are completely clean. So let me just give me a minute. Let me mark this, just the current levels out. Second, weekly, because I haven't traded GU in a while. So I think it all the layout got deleted. So if you look at price action, where do we see the highest reactions? The supply and demand area. It's around here. Yeah. Look towards the left. What do we see? This is an interesting area. I think this is a quarter point as well. 1.22500. And let me mark out a lower bound area as well. I would say, yep, this is a good area, 1.2. Right. Go down to the daily time frame. Let's see the daily time frame at the moment. What do we see? We see a lot of choppiness as well, because the last 2 weeks I think has been extremely choppy to trade. Let's see, let me mark this out as well. Daily time frame. Let's see, it's, yep, we're finding support at this 1.21500. And then another one would be, let's mark it out, is around this area here. Yep, at 1.208, I would say, this area here, you see a lot of reactions, right? 1.21, let's say. Let me mark it out. Yep. So let's just skip this for a while now. I think this should be good. I think let me put a weekly week level as well. This dotted line here is the same as the daily levels. Only thing is it's a weaker daily level, something that I wouldn't personally take trades off on, but I keep an eye out on. Yeah, that's why I marked this level out. And this would be at 1.20500. Oh my God, bro, what am I doing? Yeah, 500. Okay, there you go. All right, so now let's analyze this. Let's look at the yearly time frame. What do we see with yearly time frame? The pound dollar actually made its biggest ever lows ever, yeah, in the yearly time frames. And what do we see when you compare to the previous candles from the years from 2020? This is a bearish variation pattern, right? Why is this a bearish variation pattern? Because it's closed under this body, right? But it's a medium bearish variation. It isn't a high probability bearish variation. Why? It's because I would like this bearish body to close under this low. So it is bearish, but it's a medium probability bearish candle, right? But now we're talking about the yearly time frame. So we are bearish on the yearly time frame. Let's look down to the monthly time frame. So the monthly time frame is clearly still bearish, actually. If you look at it, has been having a lot of momentum towards the upside since October, right, of last year. And what is it doing? I think it's pretty much trying to mimic this this kind of momentum, right? But why do I say it's still bearish? Is because if you look at the structure point, we see a structure. This area here has to break for this to be bullish, right? On the monthly time frame. So we remain bearish with GU, right? Let me actually mark that out as well. Let me put a line there so we can remember this is a monthly structure point, right? So let's look at the weekly time frame. Weekly is bullish, right? Why? Again, simple stuff, structure, right? So what are we seeing now? We're starting to seeing a little bit of weakness here, because what did we see here? This was like a complex pullback, right? It made a lower high, but it did not break the last lower low. So structure wise, we still remain bullish, but I would like to see, what I would like to see is this area here break, find support least, right? And then take off, right? So what I would say with GU is, if you're going to trade it this week, as a day trader, I'd like to focus when I'm taking day trades is when my weekly and my daily time frame are aligned. I don't pay heavy attention to the monthly time frame. I would like it to be aligned, but for monthly time frame to align with my other time frames, it sometimes takes even months to align. Yeah, so I can't wait months for me to take a trade. So what I would say is if you can see this time frame here, sorry, let me do that again. I have a bunch of new settings, that's why I'm still getting a hang of it. Weekly structure point, right? So if this weekly structure point here breaks, what I would do is, like, I would look to trade it both ways. So what I mean by that is, one would be immediately after price breaks and finds support on the lower time frames, I'll take a trade, and then I would trade lightly towards the high, towards these highs probably, right? So I probably might take a trade like that. Or the second way I might take a trade is if price can keep going up, and then it gives me a pullback, right? What does this do is give me a higher risk to reward trade. So if that can happen and then it can find support here on the lower time frames, then I might take another trade to ride out this wave, right? What do I say? The trend is your friend. Yeah. So let me mark this area out. This is around 1.23, actually pretty much exactly 1.23. Yeah. So that's an area of interest to me. Let's look at the daily time frame before we start making decisions. See, you look at daily time frame. Daily time frame is bullish. So if you look at all the time frames, the monthly is bearish, the weekly is bullish, but it still needs to break this area here. But the daily has now switched to bullish, right? So now only thing to do is to wait and see if the next daily candle can start breaking these areas here. Yeah. If you look at the range as well, look at the range. If you take a trade here, the range is around 150 pips, right? That's a good range, right? If you're risking like 20 pips, that's like 1 to 7 or 1 to 8 risk to reward. That's a big risk to reward. Yeah. So I would wait for this area to break. But again, the monthly to me is still bearish, even though some might say this area here has been broken, right? But I do not know if I would hold this, give much significance to this structure point, because this has much of a solid body here. Yeah. So let's wait for that to happen. What else? That's it. I would look at long scenarios only, personally. Yeah. Any questions regarding this pair before I move into the next one? Yeah, all clear? All right.
Nope.
All right. Let's look at GJ then. GJ has been very interesting. Guys, 1 second. Let me mute. All right, so GJ has been the most choppiest of pairs, because I personally, when it comes to trading, I trade 3 pairs: GJ, Gold, and BTC. And GJ has been a little difficult to handle the past year. Yeah. Let's look at the yearly chart. Yeah. What do we see with GJ? GJ has given us a doji, right? And what did it do the last year? It found support on the yearly trend line. Yeah. That's interesting. And structure wise, it remains bullish on the yearly time frame. Because the last year, Japanese yen, the fundamentals, Japanese yen still remains quite weak, but now we are starting to see some momentum with yen. They started commenting that they might take action and such and such. And British pound, like I mentioned in the fundamentals, is kind of weak, right? So we gotta tread lightly now. So if you look at the monthly time frame, it is bearish, right? Again, structure broke through here, the monthly structure point. And what do we see with that? It's retested the monthly structure point. Let's look at the weekly. Weekly, again, what do we see? Bearish momentum, nice clean bearish momentum. But what that's done is it's left a lot of gaps. Gap there, right? And again, this previous week, we see a gap there. Yeah. So we have gaps at these two weekly structure points. Let's look at the daily as well. The daily, if you look at the daily structure, what has it done? It pulled back to grab some liquidity. And what has it done? Again, switched to bearish, right? It broke through, and again broke through, right? So we are bearish on this pair. So what I'll be doing is looking at sells. I would only want to take sells at this moment, yeah? So what would be interesting to me is maybe this, we saw the weekly structure point break here, yeah? So what I would be interested in is to see if price can do something like from this area here, give me a nice retest and hold this resistance, right? If I can hold it, then what would be really good about this trade is you'll be getting around massive amount of pips, right? Around almost 300 pips, which is a big move. Yeah. So I would be very interested to take a trade there at 158, 500, let's say. Yeah. And if this area doesn't hold, there's a good possibility that price comes to, again above here to grab the liquidity here, because there's a big price gap and we haven't had a retest here. Yeah. So this would be the highest probability short position. This would be a little bit of a lower probability short position. But if you're going to take a trade around this area, I would say take a lower risk. Right? So that's it. That's all I'll be looking at when it comes to this. Yeah. Let's look at the lower time frames, 12-hour time frame. We're already starting to see a little bit of rejection. Yeah. So I think pullbacks are coming. You see the 4-hour time frame. Again, pullbacks, necessary pullbacks are coming. 1 hour. 1 hour is still bearish, so we still need to see some momentum towards the top side. But yeah, that's what I look at with GJ. GJ is very choppy, so I would be very careful when you're taking confirmations when it comes to taking trades on GJ, because it has been wrecking people for the last few months. Yeah. So that's what I'm looking at with GJ. Any other forex pairs you want me to look at before I move into gold? All clear? All right. Yep. So let's look at gold then. Gold has been very interesting to me. What do you see with gold's last year? This is the yearly candle, yeah? Let me stretch this out. Yeah. So what do you see with the yearly trend candle? That's a doji, but indecision doji. Why? Because it closed right in the between, right? And if you look at the structure wise on the yearly time frame, we are bullish again. We remain bullish with gold. Yeah.
Yeah.
So now if you look at the monthly time frame is why it's a conundrum here. Why? Is because for monthly time frame structure is almost about to break actually, but for it to break, a lot of people had to wait from all the way from November of last year, and again still waiting for this structure here to break. That gives us multi time frame correlation. And if you look at the monthly time frame at the moment, like it hasn't closed yet, but what do we see? Straight Marubozu candle with no wicks towards the bottom and the top. So the buyers have been in complete control since the start of January. Yeah. So I would say is wait for this to see if you want very high probability trades, maybe wait for this area here to break, this structure point. Yeah. This structure point there to break. Let me go down to the weekly time frame. What do we see with the weekly time frame? It is around an important area of resistance, right? But what do we see again with the weekly candle? Again, a Marubozu candle, straight momentum, no wicks, right? Let me zoom in a little bit to show you. You see, very tiny wick, but pretty much a whole Marubozu candle from the start of the week or almost to the end of the whole week, we had buyers in control, just like BTC, right? So we see a lot of momentum. So what happens with a lot of retail traders, they want to ride this wave. But when you see a lot of momentum like this, you got to be careful, because you got to identify your areas of interest so you can get in at a better point. All right, so I mean the weekly time frame, if you want to wait if that even happens, I mean if you look at towards the left, look at the left, yeah, you see this momentum. Easily it's a possible that it can mimic the same momentum almost to the all-time highs, towards the 2K area. Yeah. So there's a possibility this can keep on pushing, because what I've done is if you look at like Aaron said, there were a lot of price gaps, right, when it even came to BTC. If you look at even this pair right here from all the time frames, what do we see? Price broke through here, no retest. Price broke through here, we got a retest here. Price broke through here, no retest, right? So a lot of price gaps. Again, on the daily time frame, if you see, no retest, no retest, no retest. Yeah. So a lot of price gaps, pretty little similar to BTC. Yeah. So what I would do is with gold. is to see if it will pull back, because I've been waiting for weeks sometimes for these structure points to get retested, and they never do, right? So there's a scenario, let's say it does play out, right? We have a weekly structure point retest there, and then we can see a momentum towards the upside, which would be at let's say 1800, a nice area, right? 1800. Right, we let's say 1800 gets retested. What else do we have? Let's look at the daily time frame. Okay, on the daily time frame, let's say price does pull back, but it doesn't pull back as much as we need, because if you look at the amount of pips it needs to retrace to our point, that's almost like 2000 pips, right? That's a huge amount of pips. So let's say price does pull back, but it does not pull back all the way there. It pull backs to our daily structure point, the structure that it broke, and maintains support, right? So let's say we get another one here at 18, let's say 1875, 1876, let's say 1876, yeah. 1876. So if we can find support around this area, then maybe you can take longs, but be careful with the amount of risk, yeah, because there's a way heavy amount of price gaps all the way at the bottom. All right, goal is clear, I guess. Let's look at the higher time frame, lower time frames. Yeah, gold now starting to show a little bit of resistance. So let's see if it does pull back where we want to. Because if you take a trade around this area, I think you're going to get a good amount of pips, right? Like the pips amount will be around 500 pips. That's big. Yeah. Obviously, you got to manage your trade, but that's a lot of pips. So this is an area I'll be looking at with gold. This and the weekly structure point area, which was at 1800. Yeah. Any questions with gold? All clear? Okay.
Yeah. With the
Yep.
gold,
Yeah.
probably from Tuesday onwards, I think tomorrow it's closed. We're looking at more of the bearish, right, for the pullbacks.
Yeah, we are hoping for pullbacks, because like I showed you, like there were so many price gaps. Price in many instances over the past 2 months or 3 months, price has not been pulling back. It has been raging, right? So so the interesting thing would be hopefully to see a pullback at least on the daily time frame.
Yeah.
This would be the optimal one, the 1800 pullback, but for now I think would be better to target this area here at 1876.
If you look at the candles, the weekly candles as well, it's like two big candles without any pullbacks or anything, right?
Yeah, this is unnatural. This is what I think what it's doing
Three,
is
actually.
like, yeah, because it's doing something like this. It's trying to mimic this price action here.
Mhm.
Why is that though? It's because if you look at price, I think there might be price gaps around this area. Actually, let's investigate. Let's see this area here. Let's look at the daily time frame. Let's see if do we have price gaps. Exactly, we have price gaps here. Like if you see, huge drop, but price never came to retest it.
Yeah.
Right. So this is at 1975 area. Yeah. So there's a possibility price can come all the way here, retest, and then pull back. But again, we have to react and adapt. So we can't predict the future. So all I can do is hope that price does at least pull back towards this area for us to take a long position. Yeah.
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 Interesting.
Yeah. Because if you keep seeing at gold, right? Like again, if you see the previous week, it came here, it started giving us indications that price might pull back. What did happen? Again, price shot up, right? And this could be because of CPI, but
Yeah.
but there's a lot of factors we got to look at. But I'm hoping for a pullback here. Yeah. What else do we have? Let's see. I think that's clear with gold. I think this is what I'll be looking at. Simple structure. Yeah.
Sure.
What shall we look at? We look at S&P 500 as well. Let's look at S&P 500. Let's go here. S&P 500. So I don't personally trade S&P 500, but it'd be interesting to see what it's done, right? Like we'll start analyzing this pair as well. It remains bullish on the at least on the yearly time frame, right? We see it it kind of because this is the yearly time frame, you can even like consider these yearly candles as double tops. So let me mark this high of the year. Actually, let me use this ray here. Masam, do you trade S&P 500?
No, no.
Okay, there we go. 2022. Let's mark out the low as well. Okay, so the yearly time frame we see, the monthly time frame, what do we see? A lot of choppiness, right? A lot of choppiness since July of last year, actually. We have been seeing a lot of choppy movements with S&P 500. What do I at least currently see is it was bearish for a while. Like if you look at the structure was bearish, right? But now now we are again at a critical level of resistance. We are, what do we see? Kind of a head and shoulder pattern starting to play out here, right? You see left shoulder, head, right shoulder, right? So we do see an inverted head and shoulder, and we do see the price is at a very critical level of resistance. Same thing again, it was at BTC, if you remember. I think all of these pairs are now waiting for Dixie dollar index to start making a decision on what it wants to do, right? And obviously the Federal Reserve meeting in Feb. So let me mark this area here. And let me put a different color because I usually don't mark out with the monthly time frame. Let me put a black line. So this area here is at 4100, let's say. Let me put it there. Yeah, let's say what 4100 area, right? So price is around this area, and now it's starting to give us some bullish indications. Let's look down into the weekly time frames now. So the weekly time frame is interesting as well. It remains bullish. Why? Price did what? Price went wait again. Let me. Yeah, price pulled up, did what? Came down, and what is interesting about this is it double bottomed here, right? So it double bottomed here, and now we're starting to see some bullish pullbacks. What do we see with these bodies are clean. These are really good confluences. Like if you look at the body of the candles, see how the bearish momentum started losing every week. Yeah, and this candle would have been a really good confluence to start taking long positions. Look at the daily time frame. So the daily time frame, let's see, let me stress this out. A lot of price gaps, obviously, because it's an equities market. It's bullish, right? Clearly bullish. There is no doubt with structure. Why? Higher highs, another higher high, right? So now, so we are bullish with S&P 500 on the weekly, right? On the monthly, what I would just wait for on the monthly is I would like to see this area here break, the black line at 150, let's say, to break. Yeah. So let's say you do trade this pair and you're a day trader. I wouldn't say take long positions on this yet, but let's say you are a day trader here. Let's look at the major areas of supply demand. What will it be? Let me mark this out to weekly. So the weekly time frame, what do we see? We see supply demand around this area here.
Yeah.
Yep. We see, let's mark out one more. We see, let's see, where else do we have? We have one around here. Yeah, this area here. And the black line, we'll keep it as such, but this can be treated as the weekly supply demand as well, right? Why? Here, here, right? Okay, so let's say that's the case. Let's look at the daily as well. A lot of price gaps here. Not sure why this doesn't change, but let me just make it gray in color. Yeah. Let me put this in. Let's see. Yep, there's a supply demand around here. Let me just mark out maybe one more. Right there. Yeah, right there. So if you look at the number here, it's at pretty much at 4K, right? So I'm pretty sure there's a significance with that figure there. Yeah. So we got to see what happens. With the daily time frame, we do see a lot of gaps, and we do see it's bullish, right? What I would do is wait, at least on the weekly time frame, wait for this area here to break, this structure here. This yep, here. So I want this area here to break. Maybe you can wait for that, or you can preferably wait for this area here to break. So only one scenario I would be very comfortable with taking is this. Maybe taking it at let's say 130. This area here to start taking long positions from. Because why? The monthly time frame still, I would wait for the structures to break here. Yeah, it's still in a very choppy range. So that's the only thing probably I'll be looking at with the S&P 500. Yeah. Let's look at Dow Jones, US 30. Okay, US 30 is a very volatile pair. So if you trade this, you have to trade with caution. Let's see. So US 30 is interesting. What are we seeing here at the moment? What do we see? Price broke through structure and is now finding support, right? Structure is here, it broke through, finding support. And that's starting to give us some confluence that maybe US 30 is starting to look bullish, possibly. And this could be also how we discuss how the market is very euphoric at the moment, because the CPI dropped, the Federal Reserve is starting to lower the pace of the rate hikes, right? So on the monthly time frame, we are bullish, and let me mark this area out again in the black line. Yep, around here. And then on the weekly time frame, let's look at this. The weekly time frame is clearly, what do we see? We see bullish nature here with what do we see here? Support form. What do we see? And now what has price done? It has broken through these structure points. Now what would be interesting is to see if this area here breaks, because why? You see the previous wick here, there's a heavy reaction here. So I would wait for price to break through here and find support here, right? And this area would be let's say 34. Let's call it a round figure at 34,500. Yeah, here. So this would be interesting. If this area breaks, we'll find some long positions to take. Let's look at the daily time frame as well. So the daily time frame is bullish, right? We are seeing, what are we seeing with daily time frame? We are seeing a lot of bullish momentum, just like some of the other pairs we discussed. The healthy way would be for price to pull back. So if price does want to pull back and you want to take a position, it would be taking it somewhere around here, maybe. Let me mark this out in blue or something. Yep. Around this area here, right? So something could happen was price reject this resistance and then pull back and then pull up. This would be interesting because you can take a position here, a lower risk position, then take and scale in, take a higher risk position there, right? And then ride out the wave and see and start taking partials. Yeah. So you can take a position here. This would be around 33,700 area, I would say. But this is a medium probability. I would say take lower risk. Yeah, 34,500. Yep. Let's look at the lower time frames. Yeah, we're still seeing a nice bullish. So I think US 30 is clean because all the time frames are correlating. The monthly is bullish. The weekly is also bullish, but it would be better if this area here breaks the 34,500. The daily remains bullish as well. So all of the time frames are correlating. So we can take nice high probability long positions on US 30. Yeah. So I think we are clear. Anything else? Any questions or any other pairs you want me to look at?
No, good. Thank you.
Okay. All right. So that probably concludes our first weekly technicals, pre-weekly technicals. Let's get it. I think